The cryptocurrency markets are about to go wild. Google searches for Bitcoin ETF have now gone parabolic. Sources have just revealed that BlackRock has more than $2 billion lined up in week one in new incremental flows from existing Bitcoin holders who are adding to their position. $2 billion first week would be huge. This is in addition to the SEC posting a warning to investors saying do not FOMO into digital assets, gearing up for a spot Bitcoin ETF approval maybe? So the SEC talks about trends and influencers. They define digital assets, including cryptocurrencies, coins, tokens. They say no-go to FOMO, fear of missing out. Just because others might buy a particular investment doesn't mean it's the right opportunity for you. Ultimately good advice. And unlike the dot-com/internet boom of the 90s, which was primarily confined to accredited investors just in the US, Bitcoin cryptocurrency is a global phenomenon. And what we're seeing is, for instance, Chinese institutions and Hong Kong banks are pushing for a spot Bitcoin ETF approval in China or in Hong Kong for their banks. They want to prevent all the money flowing into U.S. companies and institutions. Spot ETFs launching in Hong Kong will provide another substantial liquidity injection that is often overlooked. Do not fade Asia. By the way, you know how it's been Bloomberg Intelligence that's been keeping most of us in crypto up to date with the progress of the ETFs. Originally, they said they're 90% sure that these ETFs will be approved before January 6th. The question is, give us an update. What's the new percentage? Are you more than 90% by now? Are you less than 90% by now? That's a good question. Both experts at Bloomberg Intelligence say that it's no longer 90% approval, it's 95% approval. Plus, both of these two gentlemen are damn sure this thing's about to get approved. So hugely exciting that they're making spot instruments for Bitcoin and Ethereum. But even more exciting to me is what comes next and actually using these different protocols for their utility. For instance, Chainlink. You know about the partnership that the Depository Trust and Clearinghouse, which handles the settlement between these ETFs, between these securities on a daily basis. The Depository Trust and Clearinghouse is using Chainlink right now. It's not that they might use it in the future. They're thinking about it. They're using it right now, and they're scaling up how they're using it. So the Depository Trust and Clearinghouse, the world's largest security settlement system, processes 2 quadrillion annually, is exploring Chainlink's CCIP to unlock tokenized asset interoperability. So they are using it right now. They're scaling up. So listen to the founder of Chainlink explain how this all works. Listen to him explain the seamless transactions between capital markets and crypto can't happen without a single standard for cross-chain data and compute. Chainlink is perfect for this. Chainlink is doing this.
The real goal is to have Chainlink as the standard for Web3 applications on public chains. Chainlink as the standard for capital market applications on banks and asset managers, so that eventually when banks and asset managers begin to transact with Web3 applications on public chains, they have the same method for determining settlement price. They have the same method for connecting with each other. They have the same computational model for defining the security of their smart contracts, so they can trust each other's smart contracts. And what this does is it can create an internet of contracts. So it can create a single global internet of various blockchain networks and Oracle networks and smart contracts where banks, asset managers, FMIs, Web3, all of it is just one big internet, like we have a big internet for information. And this will be a big internet for value, an internet of contracts, which is really where we're going in the long term and what we're setting up the foundation for by this platform approach and this capital markets approach.
Visa triples down on its plans for Web3, crypto, and Ethereum. Visa has just unveiled its Web3 loyalty platform, allowing merchants to create custom branded crypto wallets. I don't have to tell you how big Visa using Ethereum and Visa getting into crypto is, right? 200 plus countries, 4.3 billion cards worldwide, 276 billion total transactions, 130 million plus merchants. And this is really who they're targeting with their plans for their Web3 wallet. They're getting the merchants involved.
Traditional loyalty programs are simply an exchange of spend and reward, but consumers are demanding more in return for their loyalty. Web3 loyalty goes beyond. expanding opportunities for brands to reward customers for everything from social shares to viewing content. It's an interactive, gamified experience that lets customers earn and redeem value in new and engaging ways.
Head on over to our Twitter. I reposted Visa's own 2-minute informational commercial on how exactly they're targeting merchants to use their crypto wallet. This was really cool.
Trina has a web-based digital wallet, so she's automatically subscribed as an airline rewards member with a token in just a few clicks.
So they have a very detailed plan to incorporate crypto, and they're finally rolling it out. I mean, even on their website, on their main website, they say why Web3 is the future of loyalty. Web3 and digital collectibles offer exciting new capabilities that can potentially enhance loyalty programs and create more engaged customers. They talk about Web3 wallets. They talk about NFTs, basically. Truly unreal that this is happening, and we're witnessing it. Huge for Ethereum, huge for Layer 2s. And speaking of Ethereum, speaking of Layer 2s, I liked this prediction. We will see at least 2 more Ethereum L2s this cycle developed and operated by crypto exchanges. That's one prediction. And we will see a to-be-determined number of L2s developed and operated by financial institutions. Maybe Apple, maybe BlackRock, who knows? I think this is likely. I think this is highly likely. They're super profitable with massive upside if done right, L2s. The sequencers, the validators, the L2s, they print Ethereum and they're innately bullish because they are exchange supported. Very likely scenario this happens. Speaking of Ethereum, President Donald Trump dumps millions of his Ethereum. Donald Trump just cashed out his Ethereum, $2.4 million worth. He's still holding some. Let's find out. According to an analysis by blockchain intelligence firm Arkham, Trump began sending his Ethereum that he had accumulated from his NFT sale and NFT royalties. He sent it to Coinbase. Trump is using Coinbase. He sent it to Coinbase earlier this month. In the last 3 weeks, he sold off over 1,000 Ethereum, individual Ethereum, worth a total haul of 2.4 million. Arkham says that this still leaves Trump with 2.2 million in various cryptocurrencies. Apparently, Trump's wallet still holds $1.4 million worth of Ethereum, $640,000 of wrapped Ethereum, $167,000 worth of MAGA coin. He holds some Pepe coin and about $100 worth of Jesus coin. I'm not sure if he knows about these other ones. He certainly knows he has ETH in his wallet, but because his wallet's public, people can just send him stuff. I don't know. Is this good for Ethereum? Is this bad for Ethereum? Is this good for crypto? Is this bad for crypto? I think ultimately this is probably good for Ethereum and crypto. You tell me. And speaking of NFTs, yes, currently Visa right now is using Ethereum and L2s, but do not count out Solana NFTs, and actually do not count out Bitcoin NFTs, Bitcoin tokens. This is very significant. The master chain Bitcoin has actually surpassed Ethereum and Solana in NFT sales volume. This is the first of many exciting fee streams that will accrue to Bitcoin. The concern that miners will no longer earn block rewards after the 21 million have been mined and have to rely solely on transaction fees as compensation is a moot point. You can't argue that against Bitcoin anymore. Very bullish. If you're interested in making money in cryptocurrency, subscribe to our channel. We drop 1 video every day. We will alert you as soon as these ETFs gets approved. And guys, that's just the beginning for crypto in 2024. Feel free to watch any of our videos from the past 6 months. These are chocked full of value. You guys have questions. Many of these videos answer these questions. So check back on some of our, content for the last 6 months. These are still very much relevant. Subscribe to the channel. My friends, I will see you tomorrow. Either tomorrow, the next day, the day after that, sometime in the next few days, these ETFs will get approved. Be watching. Stay subscribed.